Hello, everybody. This is Stephen Choi, and welcome to Earnings Report. So if you guys are listening to this and expecting trading with LiveWall, basically, if you look down on the community, basically there's like a little Micron logo, and I just finished doing the trading with LiveWall, and now I'm doing earnings. So what I'm going to do going forward is going to try to do 2 videos a day, just to kind of give you separated and give you guys 2 different things. Well, whoa. Okay. All right, so one of these days I won't make that mistake. But for those of you guys who've been seeing this video, I at least do that once a week, or I forget to turn it off. But anyway, so yesterday there was like just a huge list, and even by narrowing it down, there seemed to be a bunch of them. And today, when I look at it, there wasn't as many. So I'm gonna actually pick the ones that kind of stuck out to me. One is Charter Communication. Let's look at the stats. 67%. Looks like almost all to the calls. If you guys know, these guys are the ones who try to bid for the Time Warner Cable and lost. So we'll see what happens with these guys. But basically, it's not really anything. Just to read you guys the stats, the option implied move is predicting a 4.8% move, and the last 12 earnings it moved 3.5%. But as you can see, no order flow really to speak of to make any decisions. Let's look at SOHU, right? You know, maybe they're similar to Baidu. Baidu had pretty good earnings, but if you look at it, pretty much no volume. You know, going into earnings, and SOHU is, let me actually look at it. It's expecting a 7.6% move, and it's moved 8.9% the last 12 quarters. It's at the 72 percentile. If you look at it, it's kind of selling off. Yeah, so like to me, a lot of these things, maybe not SOHU, but it seems like a lot of these momentum stocks selling a call spread before earnings is a good do, because it seems like it goes down if the earnings is good, and it goes down if the earnings is bad. So just selling a call spread seems like a good way to go. But you know, I haven't tried out that strategy. I just kind of thought about it this morning. So I know Yelp is coming up, and you know, was it like Open Table and a bunch of other stuff, and I think they're going to actually have some good earnings, but maybe the right call isn't selling puts, but maybe a call spread. But you know, I still have to think about it. HLF, same thing, 48 percentile. You know, the largest block trades, or maybe buying some puts, but you know, to me, like it doesn't. It seems more like this report, when they announce it, people are going to inundate them more questions with the investigation and the inquiry more than like the actual earnings. So that's kind of what I think. But HLF is, according to the options currently, implying a 5.8% move. Last 12 quarters, it moved 5.6%. Interesting note, last 4 quarters, though, it only moved an average of 2%. So that's that. Let me go to DBD, Diebold. I don't really trade it. The only reason I actually know about this stock is for those of you guys who were around when George Bush first got elected. Basically, that little hanging Chad in Florida and stuff like that. Diebold used to make a lot of those voting computers, and there was like some, conspiracy theorists who were saying that they were rigging these Diebold machines to vote one way or another, right? But yeah, nothing here either. Maybe this could be something interesting. Triple D. I see it on CNBC quite a bit. Basically, 79 percentile. The order flow is pretty flat. As you can see, it already kind of had the sell-off. Maybe it's bottomed, who knows? But the trend is obviously downward. And if you look at the fundamentals, it's pretty bad, right? So let me actually. So the triple D, basically, the P ratio is 117. Looks like their forward PE is about 43. You know, so generally not that great of a company in terms of fundamentals. And what you're kind of betting on is that this 3D printer thing is going to catch on, which I think it will. But by that time, I'm not even sure if triple D will be the best company to actually buy, right? If it gets that popular, I'm sure somebody will win out. I'm just not sure it's going to be triple D, right? So we'll see. So that's that. So as you can see, that's pretty lean. There's nothing much going on. Basically, the only, to me, I'm still interested in Apple. So I think once it settles and I feel like it stabilizes, I want to do some more call spread. You know, I'm kind of hoping maybe it goes down back to the 540 range, not quickly, but just like slowly. But and then I can try to do these call spreads I was talking to you guys about. Let me just, if you guys missed it, let me just kind of go to them. So let's say you're doing some spread in October, right? See how it's trading almost 570. So if you did 550, 570 call spread, let me see where that is. If you did the 550, 570 call spread, you see how it's like, you see how it's like 10 bucks or less than 10 bucks for the average, the midpoint. Well, basically, if Apple stays right here, you're going to make almost 100% return on your money. And if Apple goes higher, you'll make 100% return. And if Apple, your break even is like 559, right? So this would be these kind of call spreads. I'm kind of waiting for a put on when I feel like Apple's bottomed. But right now, it's kind of in no man's land. It could actually make another huge move up, or you can kind of like, you know, kind of like do this kind of stuff where it like sells off and loses interest. Although, like, you know, the funny thing is, as soon as it splits, usually that first day, basically everyone kind of jumps in, so it seems to have a good pop. But other than that, that's kind of what I'm looking at. Facebook too is one of my stocks that I like, only because I'm not betting so much on fundamentals, right? So I just remember when Google was kind of up and coming, I kind of liked their company. The fundamentals weren't like the greatest, but you know, you can kind of see that they were trying to be something great, right? And I feel the same with Facebook. I don't think he's done, and I think he's got a lot more things to accomplish that he wants to do, and I just feel like he's very aggressive. So, you know, when somebody's like that motivated, smart, and trying to conquer the world, I just, you know, I feel like he's able to do it. So I want to kind of like put on a long-term, I'm like long-term bull in Facebook. I just don't know exactly how I'm gonna bet it, right? Because I remember in 2000 and in 2008, a lot of these great companies just got whacked. So even though like you might think like 50 is a good buy, which I think 50 would be a great entry point, basically this stock could go to like 30 bucks again. It could happen if something disastrous happens. So if that was the case, then I would kind of like back up the truck and buy it. But for now, you know, that's my viewpoint, I have these options that I thought, my thinking was that Facebook was gonna kind of like consolidate here a little bit, and I'm talking the next 3 weeks here, right? So I was hoping it would consolidate actually up here, but it, you know, above this like 7-day moving average. But let's say it consolidates right around here, maybe 55 is low, and then in the following couple of weeks, it'll kind of go back up to the 65 range. So that's kind of what I'm thinking still. But in the long run, I would like to do some trades in Facebook. Now, let's say I'm kind of trying to use the same strategy I did in Apple, right? So let's look at September's and see how they look. See, I'm already long these calls, right? But let's say I'm doing the September, like 60, not 60, it's 57. 57. Okay, so let's say I'm doing the 50-57. I'm not sure if that's the one because I really didn't look at it too much. But let's say I'm doing the SEP 50 and selling the SEP 57 call spread, right? Calls. So basically what I did was I bought the spread, the $7.50 spread for $4.20, and I can make another $3.25 on top of that. Let's say, maybe make like 70% of my investment, and I need Facebook to stay here or better, right? So I actually have $3 of downside that I can kind of withstand, and then if it goes up, I should make 70%. So maybe I'll look at something like that to trade. So Facebook and Apple, because they're fundamentally strong. I like it. Also, as you guys know, I like the financials, but since this is the earnings report, I can talk about that another time. But that's about it. No earnings really to bet on, except for the fact I see the trend that all these basically momentum stocks, no matter what their earnings, it seems like people are selling them, maybe just to rotate out. So if you're like a fund manager trying to rotate, maybe you think they're going to have good earnings and hope to get a pop, and then you're just going to unload, right? So it seems like that's kind of what's happening. I don't know for sure, but it seems that way. So maybe the strategy should be going forward on these high momentum stocks just to sell some upside call spread, because it doesn't seem like any of them are really getting a pop. I think the biggest pop I saw was Netflix, and yeah, I mean Netflix was trading what, 370 something, right? Let me see after earnings. How you doing? Good. Right, so basically it was trading between 364 and 380, and then it closed at 372 after earnings, and then all it's been doing is going down. Although they had some news that Amazon is going to be more competitive going forward because they signed that exclusive deal with HBO, but even that included, it shouldn't have sold out this much. But so my thinking is, if that could happen to Netflix, if that can happen to Facebook, if that can happen to Chipotle, that's like stuff that had good earnings. Maybe Amazon had decent earnings. Normally, like with a revenue beat, Amazon has always gone up recently, but even with the revenue beat, they went down, which is surprising. And as you guys know, companies like Pandora, basically that only kind of met whatever the expectation was and didn't blow it away. They're like really taking it on the chin, right? So I'm thinking maybe selling call spreads on these momentum. I saw like Yelp is coming up, right? So that might be one that maybe I can take a look at. But there's a few others. So as they come up, I'll kind of look at them. And now that I have some kind of like theory on what might happen with these stocks on earnings announcements, it might be interesting to make a play. But other than that, hope your trading goes well. Like I said, I will be gone next Wednesday through Friday. I'm going to see if I can actually record from Texas on Thursday and Friday from the OIC conference itself, but Wednesday definitely I'll need somebody to kind of fill in for me. So other than that, take care, and talk to you guys later.